Guys, we'll be starting the session in next 1 minute. Some participants are still joining in. So good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India. In this session, we'll take you through the Nifty 50 chart placement, along with its probable opening, some key global news and events, how US markets fared through the night, how Asian markets are trading at the moment, and at the end, chart of the day for you. So without much ado, let's start with Nifty 50 chart analysis for the day. Yesterday, Nifty had a gap down opening of 80 to 90 points and then had a minor recovery and then continued to march upwards to make an intraday high of 16,158, but came under selling pressure during second half of the day on account of global cues, and then found support near the 50 DMA. But as selling intensified, Nifty 50 breached its 50 DMA levels, which was the 16,063 levels, and closed marginally below that. The closing for Nifty 50 was around 16,058. So going forward, 16,063, which is the 50 DMA, can act as a resistance for Nifty 50, and 15,762, which is the 21 DMA, can act as a support for Nifty 50 going forward. On the market status front, Nifty continues to be in a rally attempt, and we are still searching for a strong follow through day. That is an up move of 1.5% on higher to take the markets to confirmed uptrend. Talking about the key news, let's first talk about the macro data. So the IIP data for May came in at 19.6% against consensus estimates of 19.51%, which is good. CPI inflation at 7.01% against consensus estimates of 7.03%, which can be considered in line with the marginally in line with the estimates, but still remains on the above the higher band of RBI's tolerance band, which is the 4 to 6%. On the company front, Shilpa Medicare Bengaluru unit gets UK MHRA GMP certificate. The main result that was announced yesterday was HCL Tech. So HCL Tech's Q1 FY23 PAT marginally missed estimates. Revenue was in line with estimates. Dollar revenue increased by around 1.06% QOQ to $3025 million. Revenue on the rupee front increased 3.8% QOQ to 23,464 crores. The IT business, which is the largest contributor to the top line, around 76%, grew by around 2% constant currency with an EBIT margin of around 17%. And the other businesses such as your engineering and R&D business and the product business grew around 3.7% on a constant currency basis and 5% on a constant currency basis QOQ. EBIT declined 1.9% QOQ to on an overall levels to 3,992 crores. EBIT margins contracted by 100 bps QOQ. FY23 guidance is expected to the company to grow at 12 to 14% in constant currency, with the EBIT margins expected to be in the range of 18 to 20%. Today, Mindtree and Tata Metallics is expected to report the results. Talking about the US and the Asian markets, Dow Jones, S&P 500, and Nasdaq had a muted opening and was trading in a muted to positive zone till the second half of their trading session. But in the last hour of the trading session came under immense selling pressure and declined by around 0.6% for Dow Jones, 0.9% for S&P 500, and 1% for Nasdaq. However, the Asian peers are trading in the positive territory, with Shanghai trading 0.1% higher, Nikkei 0.3% higher, and Hang Seng and Kospi 0.9% higher. Brent crude oil again went below the $100 barrel, $100 per barrel at 99.6. Yesterday it was trading around 106 on fears of again a recession in the US and the European markets. So on the US 10-year bond yield has is trading flattish around 2.98%, but there is an inversion on the 2-year, 10-year 2-year bond yield spread, where your 2-year is trading at around 3.06%, which is a signs of inversion, which is clearly indicating a recession in the US market going forward. Talking about the USD INR, closed around 79.5, with in intraday had reached a high of nearly 79.7 yesterday. Talking about SGX Nifty is indicating a positive opening. So the last trade around 835 was around 16,129 against yesterday's close of 16,058. Talking about the sectoral placement, your your key market index such as your Nifty 50 and your BSE Sensex continues to be in rally attempt. The broader market indices have moved into rally, and many other sectors such as your realty, bank, IT, financial service, FMCG continue to be have moved into rally, and pharma is the only one still in rally attempt. Um, the last time we had discussed this sectoral placement last week, and today there has been a major difference in terms of many sectors reclaiming their 50-day moving average, such as your realty and bank. So realty is trading around 5.5%, and banks are trading around 2.6% above their 50 DMA. Similarly, with financial services, have also reclaimed their 50 DMA. So on the FMCG and auto front, which are the which are the indices which are strongestly placed, are around nearly 6.9 and 7.6% for FMCG above the 50 DMA and 200 DMA, and auto around 7.9% and 9.1% above the 200 DMA, which continues to remain well placed, both the FMCG and the auto indices. Talking about the chart of the day, for today is Bajaj Auto. So before we discuss the stock any further, it's not a buy or sell recommendation, and we'll be just discussing it for educational purposes. So as we all know that Bajaj Auto is the second largest two-wheeler manufacturer in India and largest three-wheeler OEM manufacturer in India, with market share of around 18.2% in the two-wheeler OEM segment and 70% in the three-wheeler OEM segment. The Q4 FY22 was a decent result for the company, with EBITDA margins expanding by around 190 bps to 17.1% QOQ. On the commentary front, the company remains really positive on the export front on the key markets such as your Africa, Latin America, Europe, and Asia. In FY22, the company increased its exports market share by 2%, and they expect revenue growth of in double digits in FY23, and they still hold their long-term target of doubling their export business between FY22 FY25. The spare parts revenue, which is the margin accretive business, has increased to 18% of the top line from 14%, and the company expects to take it above 20%. The company is also following a premiumization strategy, which will help them to take their margins higher in the coming time. However, for the near term, the company has given a flattish margin growth guidance of around 15 to 16% for FY23 and 24, citing your increase in your raw material cost. But however, with such as your chip shortages declining and your major metal prices declining, there is chances that in the latter half of the year or maybe in the FY24, these margins can be there can be a beat on this guidance, or the management can revise these guidance going forward. So on the ratings front and the technical front, the buyer demand remains good and the group ranks remain good at 22. So we just now saw that the auto sector as a whole is trading above comfortably trading above of its 50 DMA and 200 DMA. And similarly, this group pack is also in favor as well. So the group rank is 22. The EPS strength remains fair at 60, as the last couple of quarters remained uh, on a little sluggish front in terms of growth. Uh, and the price strength remains fair at 63, but the RS line, as you all can see, has been trending higher for the last 6 months, which is a good sign for the company. The fund holding has also increased, as the fund number of funds in the holding the stock has increased by 1.7%, and the shares held by the funds are also increased by 1%. The stock found support near its 200 DMA and has reclaimed its short-term moving average, such as your 21 DMA and 50 DMA in the recent time. The stock is forming a cup with handle base, and it tried to give a breakout, but as we all know, the markets still remain in rally attempt, which is a sideways movement. So it wasn't able to break out and trading 3% below its pivot. So let's see if the stock can break out, can re-break out from the pivot, and if the markets come back to your confirmed uptrend. So thank you. That's it from our side. And stay tuned to Prebell as well, and do connect with us for the after hours with the William O'Neill India session.